What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so it's definitely time for an update on the situation that we currently have on CADCHF. Now, why is time for an update? Because the market has just created exactly the move that we wanted to see from our previous analysis on it. So I want to give you guys the new situation, the new structure that the market has, and I will also show you how we can be looking to capitalize on the next potential move here for CADCHF. So first, I will be covering the technical aspect of the pair. We will then go and see what we have from an order flow perspective with the commitment of traders by checking what hedge funds, so the biggest speculators in the market, are doing. And we will be obviously checking both the CHF and the CAD. And by the end of the video, we will know where are the best probabilities for CAD-CHF. So starting here from the monthly time frame, what do we have? Now here on the monthly, we can see that the market at the moment is inside of an extremely strong monthly demand area. In fact, from here the market had started all this move to the upside. Again, the market here tested and rejected its zone to the upside. Again here tested and rejected. Again here, and again here. So this area is an extremely strong monthly demand zone. And what we can see is that at the moment the market has just reached again this monthly demand and created a horizontal accumulation phase. In fact, we consider the market has been consolidating inside of a monthly demand area, from which usually what the market does is creates a rejection to the upside. So here on the monthly, we do expect the market to provide a rejection to the upside away from the monthly demand. Now, if we zoom in, what kind of price action does this market currently have? Now, if we zoom in, we can see that at the moment this area is very strong previous resistance, which is now turned support. Specifically, if we go down on a line chart, what we can see. Now on a line chart, we can see that the previous resistance, now turned support, is exactly at this area. Now, why did I use a line chart? Now, a line chart simply shows you the closes in the market. And if we're speaking about the monthly time frame, if you take a line chart from a monthly perspective, this means that you will see the monthly closes. And keep in mind that monthly closes are extremely strong structure areas. So here we have previous resistance, turn support on the monthly time frame defined by the close. And if we go back on the candles, we can see that in fact, this is exactly the area that the market has just broken to the upside with this candle. And as you know, after the market breaks above a structure, the previous resistance is turn support. And currently we are testing and rejecting this previous resistance turn support with this nice move to the upside. Going down on the weekly time frame, what do we see? Now here on the weekly, we consider the market at the moment has just provided a nice impulse and correction. Now, generally speaking, if you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, we consider the market just retraced exactly to the 0.32 of the Fibonacci taken on the impulse leg. However, there is one very important thing to notice. We have to notice that this area is actually also a strong structured zone on the weekly time frame, because it was acting as very strong resistance here, again resistance here, again resistance here, and currently after the market broke and closed above the area with this green candle, all this previous resistance is now turned support. So actually this touch that the market has just, this retest that the market has just created is not a retest only of the 0.32, but is actually a retest of a confluence of support area given by the previous resistance turn support with the 0.32 of the Fibonacci taken on this weekly impulse. So the market has actually just tested and rejected a very strong confluence of support, which is exactly what we expected in this specific situation. Going down on the daily time frame, what do we have? Now here on the daily, the price action that the market has been creating lately is quite clear. First, I spoke about CADCHF when the market was here. I made a full breakdown explaining all the reasons for which from here we expected the market to provide this move to the upside, and in fact, that is exactly what the market did. Then we had the creation of this W formation, and when the market was here, I made another breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside. And with the very last analysis, I explained why on CADCHF from this level we did expect the market to provide a move to the upside to complete the pattern at the previous support, now turn resistance, which is in fact exactly what the market did here on CADCHF. The market completed the pattern exactly as we wanted to see. And by the way, I will link in description all this previous analysis. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, if we go and see what we have at the moment from a COT perspective, so commitment of traders perspective, which is what hedge funds are currently doing in the market, we can see that at the moment on the CAD, hedge funds have decreased their net positions from 16K to 9K. So they almost cut their net positions in half by closing 2.3K long positions with the last report and opening 4.1K shorts, actually almost 4.2K shorts, reaching 44.2K long positions and 34.7K shorts. So overall, we are starting to see the CAD become a little bit weaker with some profit taking and adding of shorts from an institutional perspective on it. Now, if we go and see what we have from a CHF perspective, what we can see now on the CHF, we see a drop in the net positioning as well, with 3.3K longs getting closed, long positions dropping from 22K to 18K, and shorts more or less remaining unchanged. So what we're having is a weak CAD and a weak CHF, which is not good. Why it is not good? Now, if you have a strong currency against a weak currency, you have an uptrend. If you have a weak currency against a strong currency, then you have a downtrend. But if you have strong currency against strong or weak against weak, what will happen is that the market most of the times will actually enter in a range and start consolidating. So this is actually not good that we're seeing a weak CHF and a weak CAD at the moment. Now, if we look at the structure that the market currently has here on the daily time frame, what we can see. Now, here on the daily, we can see that at the moment we have very strong previous support, which is now turn resistance at this area. And at the exact same time, we also have at this low, this previous resistance, which is now turn support. So basically what we have here on the daily is the possibility to create a range inside of this area. In fact, this area is very strong previous resistance, turn support, and now again resistance here and previous resistance, turn support. So basically there is the possibility that the market will actually enter a range inside of these two levels, basically remaining trapped in between the resistance and support that we have at these two zones. Now, when it comes to range-bound markets, the only opportunities that are quite good inside of a range are W and M formations. So that is exactly what we will be waiting for until the market will remain inside of this range. So if the market will break either to the upside or to the downside, that will definitely change the structure of the market, and I will try to keep you guys updated on all my platforms. However, until the market will remain inside of this range, the only opportunity that we will be looking for with students on CADCHF is a potential M or W formation. For example, if the market here will provide to us a nice green candle after printing this red one and then reject this resistance, at that point, we will have the creation of a nice M pattern. And after the creation of an M pattern, we do expect the market to provide a nice move to the upside to complete the pattern at the neckline and reject the support that we have already identified. So if the market will print this M formation, when the market will reach this zone with students, what we will be doing? Now at that point with students, if the market will reach this area with an M pattern, inside of here, we will be monitoring price action from a 4-hour perspective. Now why 4 hours? Because monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So inside of here, what we will be doing with students is monitoring price action from a 4-hour perspective, waiting for the market to shift from a 4-hour bearish market, as we will have, to a 4-hour bullish market. And as soon as the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point, we will be adding CADCHF to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete the pattern at the previous support, term resistance, which is the neckline of the M pattern itself. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.